Hello, my name's Matthew Hall and I'm joined today by Mark Hughes and our capital markets team. And we're here today to talk to you about IPO readiness, particularly in the context of private equity-backed businesses. So Mark, to start off, perhaps you could just set the scene in terms of what we mean by IPO readiness.
So what are we trying to achieve through readiness, Matthew? Make sure we have a project plan, a roadmap that enables management teams to deliver ultimately a successful exit. Mm-hmm. What are the components of that? Well, boil it down into two areas. First of all, what's needed to support the regulatory requirements, say the prospectus, the financial information requirements, and all the other information that goes into that. And secondly, and as importantly, how does a company enable it to be fit for listed on day one, operate properly as a public company, and the changes that entails?
Okay. And why would companies go through an IPO readiness assessment?
Well, this is all around taking the risk out of the back end of the process once you've actually decided that you're formally going to initiate a transaction, bring together the advisors and kick it off. What does it help you with? Well, first of all, you've got a clear plan of what all the issues are, how you're going to remediate those issues, who's going to do it, when's it going to be done. Which means that when you do push the button to initiate the IPO, you can do that quickly and efficiently, which de-risks the process at the back end.
Okay, so it's all about getting you in the best possible place for a smooth process.
Absolutely, yeah.
And clearly you've advised on a number of these transactions over the years, Mark. What are some of the common pitfalls that you see coming out of IPO processes?
Well, I guess they fall into many shapes and forms, but in the private equity world, often the financial information is very, very important. Without that, you can't actually launch a transaction. You've got to have your IFRS conversion in place. If private equity houses have been through a buy and build process with their portfolio companies, that may give rise to pre-acquisition information needing to be included within the prospectus as well. All of those things need thinking through up front. More broadly, also the tax and the structuring aspects are very important. Again, private equity have Luxembourg structures in place. Unpicking those so you end up with a tax efficient process both for the house and for the ongoing corporate is important. Yeah. And the location of ultimately the issuing company, whether that's in the UK or further afield. And then also thinking through the management incentive arrangements, both those that are currently in place and then thinking about the new arrangements going forward, which is a very important thing for both obviously the individuals involved, the private equity house, but also the incoming investors to make sure that everybody thinks they've got a fair deal.
So lots of different work streams to think about there. The other thing we hear about commonly in private equity world around IPOs is this concept of a dual track process. Could you perhaps just elaborate on what that is and what it involves?
And I think nowadays it's much more common and frequent to see those. And this is where you're running both a trade sale process either to a corporate, another private equity house, or potentially a sovereign wealth fund, and the IPO process itself. In thinking about readiness, many of the issues that you're going to deal with in an exit scenario are going to be common to all those tracks. And I would say roughly kind of rule of thumb around 80%. There are going to be nuances, like for an IPO you've got the corporate governance regime for a public company, which you're not going to have to pursue in the other routes. But your management team should take away that the majority of these things are going to be common across all streams. And certainly when we think about IPO readiness or exit readiness, we're going to do thinking about all the potential exit horizons that may be explored.
Yeah. Thank you. So lots to think about there. I mean, I think if I reflect, having worked across a number of IPOs over the years, the one thing that's common is when you hit that button and decide to go for the process, the advisors land from all directions. And actually what an IPO readiness assessment helps you do is be in the best possible shape ahead of that point, so you have a really smooth exit process. I hope this has been helpful for you. If there are any themes you'd like to pick up on, feel free to get in touch with either Mark or myself, and our contact details are on the website. Thank you.